Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex language of big business. And today we have a really meaty one, a shareholder report from BlackRock Funds, a giant in the investment world. And let me tell you, this filing is packed with numbers that can make your eyes glaze over if you are not careful, but we are here to sort through it and find the juicy bits, the things that really matter for invest. And for anyone curious about how these massive funds operate, so buckle up because we are diving deep into a full year of financial performance strategy and even some risk assessments. You will not want to miss this, and hey, if you dig this kind of content, if you like getting the real scoop without the corporate jargon, make sure you are subscribed and join our Discord community linked in the description below for even more insider discussions. Alright, so this report comes straight from BlackRock Funds filed with the United States Securities and Exchange Commission, an organization that keeps track of publicly traded companies and investment funds. This particular report is an annual shareholder report for the fiscal year ending the 31st of July 2025. You get to see how several of their funds have performed over the last year, a critical period for any investment. We are sifting through reports for funds like the iShares Russell Midcap Index Fund, the iShares Russell Small Midcap Index Fund, and the iShares Total US Stock Market Index Fund. Basically, they are tracking different slices of the US stock market. Starting with the iShares Russell Mid Cap Index Fund with institutional shares, we see a return of 11.85% for the year. Not too shabby, but how did it stack up against the market itself? Well, the Russell 3000 Index, a broad measure of the US market, gained 15.68%, and the Russell Midcap Index, a more focused benchmark, returned 12.06%. So the fund slightly lagged the broader market, but beat its specific mid cap benchmark, which is interesting. Now, let's talk costs, and this is where things get really simple for a hypothetical $10,000 investment. The cost for these institutional shares was just $10, that is practically free. 0.09% of the investment is a tiny expense. The total assets managed by this fund were a massive $2.16 billion, with 821 holdings, which tells you it is a very diversified fund. Looking at how the money is invested, we see industrials top the list at 18.1%, followed by financials at 15.3%, and consumer discretionary at 11.9%. These are the sectors where the big bets are placed. And what are the 10 biggest bets? Well, the iShares Russell Mid Cap ETF itself is a top holding at 0.7%. This might seem a bit meta holding an ETF that tracks the index within the index fund, but it is a common practice. Royal Caribbean Cruises and Coinbase Global Incorporated are also in there among the top holdings, showing a mix of sectors and company sizes. Now let us jump over to the investor as shares of the same mid-cap index fund. Here the performance was 11.62%, a little lower than the institutional shares. And again it lagged the broad market index, but kept pace with its mid-cap benchmark. The costs here are noticeably higher at $38 for a $10,000 investment, which translates to 0.36%. This is not astronomical, but you can see how those little fees add up, especially compared to the institutional shares. Next, we have the Class K shares of the Mid-Cap Index Fund. This class is designed for institutional investors, and the costs are incredibly low, just $4 on a $10,000 investment, that is 0.04%. Its return was 11.95%, slightly outperforming the institutional shares. Moving on to the iShares Russell Small Mid-Cap Index Fund. This fund tracks a blend of smaller and mid-sized companies, and for the institutional shares, it returned 4.19% for the year. This is a significant underperformance compared to the Russell 3000 Index, which returned 15.68%. The Russell 2500 Index, a closer benchmark, returned 4.28%. So the fund performed right in line with its specific benchmark, which suggests it is doing what it is designed to do, but the overall return was quite modest in a strong market year. The assets here are smaller at just under $1 billion, and the number of holdings is much larger at 2,469. This fund is investing in more potentially smaller companies compared to the mid-cap fund. Industrials are again the largest sector allocation at 20.3%, followed by financials at 17.4% and information technology at 13.3%. This is a common theme across the funds due to the nature of US equity markets. The top holdings here are more spread out and include companies like EMCOR Group Incorporated iShares, Russell 2000 ETF, and Comfort Systems USA Incorporated. It is a good reminder that even within index funds, there are specific companies that make up the portfolio. Finally, let us look at the iShares Total US Stock Market Index Fund. For the institutional shares, the return was 15.64%, which is very close to the Russell 3000 Index return of 15.68%. This fund is essentially trying to mirror the entire US stock market. The costs are incredibly low, just $6 for a $10,000 investment, that is 0.06%. This is the beauty of broad market index funds. This is BlackRock's largest fund in this group with over $4.1 billion in assets and 2,685 holdings. Information technology is the dominant sector here at 31.3%. This highlights the heavy weighting of tech giants in the overall US market. Financials and consumer discretionary are far behind. And who are the biggest players in this total market fund? None other than Nvidia Incorporated at 6.8%, Microsoft Incorporated at 6.4%, and Apple Incorporated at 5%. These tech behemoths are driving a huge chunk of the performance and valuation. I mean, just look at the sheer dominance of these top few companies. It really paints a picture of the current market landscape. Now, beyond the financials and performance, this filing also includes important operational details like their code of ethics. They mentioned that this code was amended for non-material changes, and importantly, no waivers were granted during the period. This suggests a strong adherence to ethical guidelines, which is crucial for investor trust. Then we have the Audit Committee financial experts Neil A., Cody Henry R. Keyser, and Kenneth L. Urish. Their designation means they have the financial chops to oversee the financial reporting and auditing of these complex funds, which is a key governance element. Let's talk about PricewaterhouseCoopers, LLP PwC, the independent auditors for the iShares Russell Mid, Cap Index Fund iShares Russell Small Mid, Cap Index Fund, and iShares Total US Stock Market Index Fund. The audit fees were $23,129 each. That is pretty standard for the scope of work and similar to the previous year. Tax fees were also minimal, around $15,300. This shows a consistent relationship with their auditor and no major red flags in terms of unusual services or fees. The fees billed by PwC also must be approved by the fund. Audit Committee, which helps ensure independence, and that services are directly related to the fund, operations. And then we get into the really detailed financial statements themselves. We see derivative financial instruments are discussed, meaning these funds might use options or futures to manage risk or enhance returns. They also provide a detailed schedule of investments where you can see every single holding and its value. For example, in the Mid-Cap Index Fund, they were holding futures contracts on the S&P 500E Mini Index and the S&P Mid 400E Mini Index. These are essentially bets on the future direction of these indices, and the unrealized depreciation on the S&P Mid 400 futures was over $139,000, suggesting a slight loss on that position at the end of the period. Then there is the fair value hierarchy. This is how they classify assets based on how easy it is to get a reliable market price. Level 1 is based on quoted prices in active markets. Level 2 uses other observable inputs, and Level 3 relies on unobservable inputs, meaning more judgment is involved. For these funds, the vast majority of investments fall into Level 1, meaning they are readily valued on the market. This is typical for index funds holding publicly traded stocks and money market funds. Now let us look at the incredibly long disclosure about the Investment Advisory Agreement and Sub-Advisory Agreement. This is where the Board of Trustees, a group that oversees the fund and is supposed to act in shareholders' best interest, meets to decide whether to continue their contract with BlackRock. They go through a year-long process reviewing performance fees, resources devoted to the fund, and even BlackRock's profitability. It is a deep dive into the relationship and ensuring it is fair for investors. They are comparing fees against peer funds, analyzing investment performance, like for the Mid-Cap Index Fund, where net performance was within tolerance of its benchmark. And for the Total US Stock Market Index Fund and Small Mid-Cap Index Fund, their net performance was actually above their benchmark. This is a good sign they are not just tracking, but also performing well relative to their goals. So what is the overall picture here? BlackRock funds are massive diversified index funds. The institutional and Class K shares offer incredibly low costs, which is fantastic for long-term investors. The performance generally tracks their benchmarks with some slight variations. The mid-cap and total US stock market index funds, for instance, are showing solid returns that align well with or even beat their respective benchmarks. The small mid-cap index fund had a more modest return for the year, but performed in line with its specific index, which is designed for that segment. The significant holdings in tech giants like Nvidia, Microsoft, and Apple for the total US stock market fund clearly illustrate the current market's heavy reliance on these companies. Risks are generally market and valuation risks inherent in any equity investment, and the filing details these well. The robust governance with a focus on audit committee expertise and ethical codes is reassuring. In conclusion, these funds are performing as expected for index, tracking vehicles offering low-cost exposure to different segments of the US stock market. The expense management and performance are generally sound. What stands out is the transparency and thoroughness of their reporting process, especially the annual review of advisory agreements showing a commitment to shareholder interests. Alright, that is our deep dive into BlackRock Fund's latest SE filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And do not forget to check out our Discord linked in the description below. Thanks for watching, see you next time.